Let's look at 4 ways to prepare for inflation. Number 4, stock up on non-perishables. No one likes the idea of inflation, but unfortunately it's a fact of life. Prices on everything from groceries to gas seem to be constantly on the rise, and there's no end in sight. However, there are some things you can do to prepare for an inflationary period. One way is to stock up on non-perishable items, like canned goods and toilet paper. Another way to prepare is to keep an eye out for sales. When you see items that you use regularly selling at a discount, take advantage and buy in bulk. By doing this, you'll be able to save money in the long run and hedge against rising prices. Number 3, in order to get the best value for your money, it's better to purchase large items like a house or a car when interest rates are low, instead of waiting until they rise along with inflation. When inflation is on the rise, it can be tempting to delay major purchases in hopes of getting a better deal down the road. However, this strategy can backfire if interest rates rise at the same time. An increase in inflation can lead to an increase in interest rates. As a result, buyers who wait too long may end up paying more for their purchase than they would have if they had acted sooner. This is why it makes sense to take advantage of low interest rates and buy big ticket items when inflation is low. By doing so, borrowers can lock in a low rate and avoid paying more for their purchase down the road. Number 2, keep investing in the stock market. When inflationary pressures start to build, it can be tempting to abandon your investing plans and move your money into cash. However, history has shown that this is often not the best strategy. Your money will make greater returns if you keep investing it for longer, as history has shown us. Don't veer from your investing plan during periods of inflation. When there's more demand for products and services, companies are able to raise prices. As long as wages increase at a lower rate than prices do, profits for corporations will go up, and so will stock prices. As a result, if you sell your stocks and move into cash, you may miss out on significant gains. Instead of selling your stocks, you may want to consider holding on to them and continuing to reinvest your dividends. This will help you take advantage of any upward movement in the market and benefit from the power of compound returns. Over time, this strategy can help you grow your wealth regardless of inflationary pressures. Before I move on to number 1, make sure you subscribe and click the bell. That way you'll be the first to see my next money-making video. Number 1, invest in real estate. As any seasoned investor knows, one of the key ways to protect your wealth against inflation is to invest in real estate. Over time, the value of property tends to rise at a rate that outpaces the rate of inflation, providing a hedge against the loss of purchasing power. Additionally, real estate can provide a reliable source of rental income, which can help to offset any increases in the cost of living. For these reasons, investing in real estate is an important part of financial planning for many people. Of course, it's important to consider the risks involved in any investment, but for those who are willing to take on a little bit of risk, investing in real estate can be a great way to safeguard their finances against inflation. Click the video on the screen to see another money-making video.